When insurance companies stack exclusions, homeowners lose. And what should be a covered loss, where they get enough to fix their house, isn't. We've talked a lot about different exclusions, but I want to talk a little bit about how they work with each other. And I'm going to give you a real world example that we've worked on here at Herman Wells. So let's say we have a home insured for $450,000 that is damaged by Hurricane Milton. The roof's damaged by the wind, which creates an opening and allows water inside and causes more water damage inside the home. The homeowner calls their insurance company, who comes out, looks at the damage and says, this is covered hurricane damage. But that's where the dispute starts. First, this home has solar panels on it, and it's going to cost money to take those solar panels off and put them back up. But under this policy, solar panels are excluded from coverage if the damage is caused by a hurricane. So if those panels are damaged, the homeowners are on their own. And it's not clear if the insurance company is going to be obligated to take those panels down and put them back up at a cost that often exceeds $10,000. The roof itself is damaged. It's a shingle roof, and it wasn't brand new when the storm hit, because whose roof is? So that roof is going to be paid at what's called actual cash value, which means that the cost of the roof is going to be depreciated so that you get less money. And this policy also has a roof payment schedule, which means that for a 10-year-old roof, you're only getting about 40% or 45 or 50% of the roof's value, depending on that policy schedule. So let's say you have a roof that should cost $30,000 to repair. It's going to be reduced by that roof payment schedule to 40, 50% of that value. And then that hurricane deductible is going to be applied. And in most cases, it's 2% of your policy. So remember, it's a $450,000 policy, and you have a $9,000 deductible. So your roof that should be covered for $30,000, maybe you get $2,500, $3,000 for it, because that's what your policy covers. And you still got to put those solar panels back up, especially if you don't own them, and you're going to have to use the same company that installed them in the first place. So you don't have a choice to shop around. Now let's talk about the interior of your home, because the water came in through the roof, down through the attic space, got in the insulation, went through the ceiling, and got under the walls and the floor. And you weren't home during Hurricane Milton because it was a major storm, and you did the responsible thing and you left. And when you come back a week later, your home has mold and water damage on the inside. Now that mold damage, you're limited to $10,000 under most policies. So if it costs more to remediate your home to get rid of that dangerous mold, you have to pay that. Your floors, those are going to be covered because the damage was caused by water that came in. And so let's say the floors cost $40,000 to replace your floors throughout your home. You've got nice hardwood floors that run all the way through, nice and continuous, no separation. Well, this policy has a 1% matching limit. And remember, it's 1% of that $450,000. So you only have $4,500 for matching. The insurance company is going to assess the direct physical damage to your floors. And they may tell you that $40,000 flooring job, we're only going to give you $10,000 for the actual damage. And we're going to limit to 1% for matching. So now you're getting less than $15,000 for a $40,000 job. Now, when we add all that up, the homeowner is going to spend $80,000, $90,000, $100,000 to fix their house. The solar panels, that roof, the insulation, the ceiling, the walls, the floors, and the water mitigation and mold mitigation. But they might get less than $20,000 once you stack all of those exclusions and limitations. So when you're shopping for insurance and you're comparing policies, look at the declaration page. Look at the coverage checklist, which is the second page of that declaration, or sometimes the third page, and see what your policy covers and what are limited. And then actually look at what you might get. So you can decide whether this policy provides coverage for you or it's just checking a box for your mortgage company. Not all policies are the same, but when carriers stack exclusions, homeowners lose.